Hello, welcome to all. In this video, we are going to discuss about test your knowledge questions relating to chapter ITC. So, in this ITC chapter, first question. What is there in first question? That is, Genuine Private Limited Agra is registered supplier engaged in the manufacture of taxable goods. So he is engaged in manufacture and taxable goods valued at 10,50,000 were supplied by the company to Farshid Private Limited, a registered supplier located in Farhadabad, without cover an invoice with fraudulent intent. So they is not cover the invoice. So it is a fraudulent transaction since the company avoided tax by not issuing the invoice for supply. So he has not paid the tax amount of related to amount of 10,50,000. A show cause notice was issued by the proper officer under section 74 requiring the company to pay tax at the rate of 12%, that is 1,26,000, and applicable interest and a penalty. They are crimed for issuing that show cause notice. The company has paid the tax, interest, penalty after order was passed by the proper officer. Examine the ITC entitlement of Fresh Bright Private Limited in respect of tax paid on 1,26,000 paid by the Genuine Private Limited. So, if any person has paid the tax amount with penalty or interest after the show cause notice, the ITC is not available as per section 74, 129 or under section 130. So, answer will be as per section 17.5 will be deal this. Answer will be first one. No? How many questions is there, ma? 25 questions. Okay. First answer will be as per section 17.5. As per section 17.5, tax paid under section 74, 129, 130, 74, 129, 130 is not available as ITC. If you are paid the tax as per section 74, 129, 130 is not available as ITC. And further, rule 36.3 also lays down that tax paid in pursuant to any order. Tax paid in pursuant to any order where the demand has been confirmed by an account of any fraudulent, willful misstatement or suppression of fact. Fraudulent, willful misstatement or suppression of fact cannot be available as ITC by the registered person. If you paid the amount on your own, it is eligible for ITC. If you are paid the amount by when the person was told, that is proper officer show cause notice was issued, then that amount is not eligible as ITC. Then here the person, registered person who is Genuine Private Limited, has paid tax in pursuance of order issued under section 74. Therefore, Fresh Bright Private Limited is available of ITC of such tax is not available. Not available. Next, question number 2. What is there in question number 2? So, question number 2 will be, there is Flaming Limited is in airlines. So, is in airlines providing passenger transportation service by air. Okay, the company offers meal on premium quality to passengers on board aircraft. So this is related to food and beverages related, and the value of such meals is compulsory included in the price of the air ticket. So the amount was included in the price of the ticket. Okay, the company avails outdoor catering services of Dhaniram Private Limited. So when there is a outdoor catering services, here outdoor catering services, for outdoor catering services case for providing such meals to its customers, examine whether Flaming Limited can avail the ITC of on such outdoor catering services availed by it. In case of outdoor catering services, the amount ITC will be not allowed, but if it is for the purpose of using that procuring means same nature of business, then ITC will be allowable. ITC and outdoor catering service will be procured by it, then it will be treated as composite or mixed supply in accelerate to the our services. So then that case there will be allowable. If in any other cases, the same will not be allowable, same will not be available. So in our case, section 17.5 ITC and supply of inter-area food and beverages and outdoor catering services is blocked. So outdoor catering services will be blocked. However, ITC in respect of such goods or services or both shall be available where the inward supplies of such goods or services or both is used by the registered person for making an outward taxable supplies of the said person, category of goods, services or both, or as an element of taxable composite or mixed supply. We are doing one supply and in that supply it was required then it may be composite or mixed supply. It may be composite as mixed supply. When we are going to fryer for one day, in one day they must require food, so they are providing. This is in addition to that. So in the given case, Flaming Limited is availing outdoor catering services to provide outdoor catering meals to the passengers on the board the aircraft. Since ITC in respect of outdoor catering is available if the same is used for hand making and outward taxable supplies as an element of taxable composite or mixed supply, Fleming Limited can avail ITC and outdoor catering services procured by it. It is allowable for that Fleming Limited. So because they are providing based on this outdoor service, using that outdoor catering, and they are producing taxable supplies, outward taxable supplies, so they are allowable for claiming the ITC on outward supplies. Next, question number 3. What is there in question number 3? Jumbo Sales Private Limited, a supply of ready-made garments, announced buy one get two free offer on men's t-shirts on Diwali to boost its sales. You are required to advise the company on availability of ITC in respect of inward supplies used in relation to supplies. When there is no consideration, it is not treated as it will not be treated as supply. But in some cases, when there is one product amount is included in another product, then it will be treated as consideration was received. So in our case, question number 3. Question number 3. What is the question number 3? They are providing two shirts for one shirt price. So it may be treated as they are collecting the amount for one amount. So they may be allowed for entire single price was charging for that amount. So it is appear that at first glance that case of offers like buy one get one, one item is being supplied free of cost without any consideration as per section 7.1 thereof. Goods or services which are supplied free of cost without any consideration shall not be treated as supply, but except in case of activities mentioned in schedule 1. If that is mentioned in schedule 1, what is there in schedule 1 has clarified to entitlement of ITC in the hands of supplier in respect of sales promotion. In respect of sale promotion schemes like buy one get one free, such promotional offers are not individually for supplying a free of goods, but a case of two or more individual supplies where single price is being charged for the entire supply. It can at best be treated as supplying two goods for the price of one. So it is treated as they are providing two goods for single price. Next, taxability of such supplies will be dependent upon as to whether the supply is composite supply or mixed supply, and rate of tax shall be determined as per provisions of section 8. So rate will be decided based on composite supply or mixed supply. In case it is a composite supply, principal rate will be taken. If it is a mixed supply, highest rate will be considered. So ITC shall be available to the supplier for the input services and capital goods used in relation to supply of goods or services or both as part of such offers. So such offers ITC will be allowable. Therefore, in the given case, nothing the case individual supplies for free goods, but a case of three individuals supplies where single price is being charged for the entire supply. Thus, Jumbo Sales Private Limited will be eligible for ITC, input service, input goods and capital goods used in relation to providing that t-shirts as part of their business or as part of their offer. So they are eligible for claiming the ITC. There is no restriction for claiming the ITC. Next, question number 4. A garment factory receives a government order for making uniforms for commando units, that is commando persons, that is army persons. So that is exempted sales. This supply is exempted from tax under a notification issued under section 11 of CGST Act. So the fabric is separately procured from the supply, but thread and lining material for the collars are the one which used for other taxable products also. So here company is producing one commando product and one other taxable products, and they are providing two types of products, exempted and taxable. But for that input is using no input threads needles lining products, that they are taxable and they are paying tax. Okay. The turnover of the other product of the factory and exempted uniforms in July is 4 crores. So its turnover will be 4 crores. The turnover will be 4 crores. So what can we see, that there are 1 crores, and the ITC and thread and lining material procured in July will be 5,000 and 15,000. 5,000 and 15,000. Thread is 5,000 and lining material is 15,000. Total 20,000. That is, total 20,000 will be treated as common credit, which is using for both exempted turnover and total turnover. For exempted turnover, exempted turnover amount credit will be deducted from the total common credit. So question number 4. Threading and lining material are inputs which are used for making taxable as well as exempted. So here they are producing taxable as well as exempted supplies. Therefore, credit on such items will be apportioned. Credit on such items such be credit as attributable to exempted supplies will be reversed in terms of rule 42. Whatever the exempted supplies input will be reversal. How we will calculate based on this? Common attributable to exempted supplies is equal to credit available to exempted supplies is equal to whatever common credit is exist, common credit into exempted turnover divided by total turnover. So common credit into exempted turnover divided by total turnover. Next, common credit is equal to 15,000 plus 5,000, that is thread 15,000, lining 5,000. Total 20,000 will be common credit. Exempted turnover was provided 1 crore, total turnover provided 5 crores. Total this will be 1 crore plus 4 crore total turnover. Next, credit attributable to exempted turnover. Credit attributable to exempted turnover will be calculated based on total credit attributable calculated based on common credit available 20,000 into 1 by 5, that is 4,000 is ineligible ITC. This 4,000 will be reduced in the filing of form GSTR 3B. So 16,000 will be allowable as credit. In the month of which month they are filing the return, they will claim only 16,000, and reversal of that 4,000 will be done by that company, because that is exempted credit. Next question, 5th question. What is there in 5th question? Ceramity Limited has following units. Ceramity Limited has following units. Factory in Tumkuru, Karnataka, turnover 27 crores, 1920. Service unit in Hyderabad, Telangana, turnover will be 1 crore. So total turnover will be 28 crores. Next, service center in Chennai, Tamil Nadu, turnover will be 2 crores. That is 28 plus 2, 130 lakhs is 30 crores will be a turnover. Ceramity Limited is a corporate office function as ISD. This Ceramity Limited is a ISD as it distributed ITC of 9 lakhs. So it has 9 lakhs of credit for the May 2020. On this invoicing involving tax amount will be 3 lakhs pertaining to technical consultancy of Tumkuru Limited. So out of 9 lakhs, 3 lakhs will be Tumkuru. So 3 lakhs will be specifically Tumkuru. So it will be transferred to Tumkuru, and remaining amount is distributed apportionment based on their turnover. Explain briefly how should ITC be distributed. So ITC will be distributed based on their turnover, and that 3 lakhs will be directly apportioned to the Tumkuru Limited. So answer will be provided. 5th question answer. As per rule 39D, relation to ITC, that is 3 lakhs is attributable to Tumkuru unit and will be transferred to Tumkuru. Only. Next, remaining 6 lakhs has distributed among Tumkuru unit and services center in Hyderabad and Chennai in proportion to their turnover in the previous financial year, that is in 1920. So their total turnover will be 30 crores. Tumkuru Limited turnover will be 27 crores. So common credit available 6 lakhs. 6 lakhs into 27 crores divided by 30 crores is equal to 5.4 crores will be available credit for Tumkuru Limited, and Hyderabad Service Unit Limited will get 1 crore by 30 into 6 lakhs, that is 20,000, and Chennai Service Center will be get for 2 crores divided by 30 into 6 lakhs, that is 40,000. Ciramati Limited has issued ISD invoice. It must issue the ISD invoice from GST number obtained separately for ISD. It must get GST number separately for as registering as a ISD for distributing the ITEC as calculated above to the units. It should be clearly indicated the invoice that the same is issued only for the distribution of ITC. It must distribute that only for distribution of ITC. It is must registered. Then after registration it must issue the invoice. In invoice it must disclose that it is only for distribution of ITC purpose. This is ISD case. Next question number 6. What is there in question number 6? A registered supply of taxable goods supplied goods valued at 2,24,000 inclusive of IGST 12,000, SGST 12,000 to Mohan Limited under forward charge mechanism on 15th August. So supplied goods will be 2,24,000 and tax invoice was also issued on the same date on 15th August. Okay, the input was received by Mohan Limited on 15th August. Mohan Limited availed credit on 24,000 on September filing month. GST through be August. However, Mohan Limited did not make any payment towards such supply along with tax therein to the supplier. Is Mohan Limited eligible for avail ITC of such supply? Discuss ITC provisions if Mohan Limited make payment 2,24,000 to the supplier on 18th March next calendar year. Here section 16 will tell that if any amount payable it must be paid within 180 days. If within 180 days he is not paid, the amount which is claimed as ITC it must be reversed, and the amount will be payable reversed with interest and added to the output tax liability. And when the amount was repaid, then you may claim that amount without interest amount. So as per section 16, Mohan Limited is eligible to ITC of the tax paid on input received by it on basis of invoice issued by the supplier, provided other conditions for availing ITC are satisfied. What is the other conditions for satisfied? That other conditions may be that invoice must be contain the GST number, and invoice must be contain the GST number, tax amount, that other conditions. Next, payment of value of goods. Payment of value of goods along with the tax as to the supplier is not a prerequisite at the time of availing the credit. So payment is not a prerequisite at the time of availing credit, but Mohan Limited has to pay the said amount within 180 days from the date of issue of invoice. If Mohan Limited fails to do so, that ITC of 24,000 will be added to its output tax liability with interest after the expiry of 180 days. Such interest will be paid at the rate of 18% from the date of availing the credit till the date when the amount added to the output tax liability is paid. Next, if Mohan Limited makes payment of 2,24,000 value plus tax to the supplier in the month of March, that is 18th of next calendar year, that is after expiry of 180 days from the date of issuance of unit. So Mohan Limited can avail that credit 24,000 while filing GST 3B in the month of March. So at the time after the expiry, he must add back to the output tax liability plus interest, and he will be claim that amount even he has paid at the month of March. So at the time of March he cannot claim the interest amount input, only the output tax liability how much he is paying. Next, what is question number 7? What is there in question number 7? State the condition that need to be followed by input service distributor for distribution of credit. So input distributor condition, there may be 10 to 12 conditions you must to follow. That is ISD, you must to be take separate registration, you must issue the invoice, ISD invoice, distribution not exceed the amount credited whatever the amount is exist, and you must transfer both eligible and ineligible amount, and CGST IGST distributed separately, and ITC and IGST should be distributed IGST. That the terms 10 to 12 points is there for conditions for ISD distributions. Which question? Question number I think 7th question. Okay, 7th question answer will be they are provided like this. The following conditions need to be followed by the input service distributor. That is for distribution of credit. When this is distribution of credit, ISD must follow that. ISD is required to obtain separate registration for distribution of credit. You must get the registration. Next, the credit can be distributed to the recipient of credit against an ISD invoice containing prescribed details. You must issue one invoice, ISD invoice, and in that invoice that details, prescribed details must be provided. Next, input of credit distributed to the recipient of credit against ISD invoice containing prescribed details. Okay, provided amount of credit distributed shall not exceed the amount of credit available. How much amount is available? It does not exceed the amount credit distributing those persons. Next, the credit related to the an input service must be distributed only to the particular recipient to whom that input service is attributable. So who is receivable, that person only get that ISD input. Next, if the input service is attributable to more than one recipient, if the person is receiving more than one recipient, then that amount will be distributed based on pro rata to such recipients, that in the ratio of turnover of recipient in the state or union or aggregate turnover of the all recipient to whom that amount will be distributed or transferred, operating in the during financial year. Next, ITC pertaining to input services which are common for all inputs is distributed to all the recipient in the ratio of turnover in the prescribed manner. So common to all, there is no special provision for any person. Next, ITC available for distribution in a month shall be distributed in the same month. So this must be used in same month only. If you have any previous year month pending distribution, you will not distribute now. Same month close the matters, and details thereof shall be furnished in the prescribed form. Both ineligible and eligible ITC are to be distributed separately. Next, ITC available for distribution in the month, provided both ineligible and eligible ITC will be separately. Next, ITC CGST, SGST, UTGST and IGST distributed separately. You must show in invoice separately. Next, relating to ITC of CGST, SGST, UTGST in respect of recipient, if the recipient is located in same state, the same state or union territory is distributed as CGST, SGST, UTGST. If CGST, SGST, UTGST, if the recipient is located in other state, then amount of IGST will be distributed. Next, ITC on account of IGST is distributed as IGST. That is question number 7. That is conditions relation to input service distributor when he is distributing the input tax credit. Next, question number 8. What is there in question number 8? In question number 8, what is the information provided? Means there is a with reference to the provisions of section 17, examine the availing ITC in the following independent cases. They are provided 3 independent cases. We must tell that input ITC availability. Okay. In first case, MBF, an automobile company, has availed work contact service for construction of a foundation which a machine to be used in the production process to be mounted permanently. So it is capitalized expenditure. They may claim the first of all, if any person work contact related, it will become black credit, but relating to plant and machinery, it will not become black credit. If that plant and machinery is not claimed depreciation, ITC available. Next, Shah and Construction procured cement, paint, iron rods and service of architecture and interior design for construction of commercial complex for one of its client. So one of its client means they are for the furtherance of course of business, so they will be allowable for credit available. Next, ABC Limited avail maintenance and repair services for Jaggi Motors for truck used for transporting its finished goods. So it is also allowable for ITC. But even though these 3 cases are blocked credit, they will be allowed as credit. They can claim availment of credit is allowable as per section 7. So question number 8. First, what is there in question number 8? First question will be section 17.5c. What is there in section 17.5c? Black input tax credit in respect of work contract. This is a blocked credit when supplied for construction of an immovable property other than plant and machinery, except where it is input service for further. Okay, input service for further. And further in terms of plant and machinery means various equipment and machinery fixed to the earth by foundation or structure. What is meant by plant and machinery? Plant and machinery means fixed to the earth, attached foundation for are used making outward supplies of goods and services, and includes such foundation or structural support, but excludes land and building or other civil structures, telecom tower and pipeline laid down outside factory premises. So it will not come under plant and machinery, even though they attach to the land. So building and other civil structure will not come, and telecommunication tower and pipeline laid down outside factory cities. If you constructed these three items, it will be not allowable of ITC, that is blocked credit. Next, in view of the above mentioned, ITC is available in respect of work contract service availed by the MBF Limited, has the same used in construction of plant and machinery, which is not a blocked credit under section 17(5). It is assumed that the expenditure incurred towards work contract service is capitalized in the books of MBF Limited, and no depreciation has been claimed on tax component. If he is not claimed the ITC, not claimed the depreciation, then he will eligible. Next, second question, section 17(5) D related to block of ITC. It is also a block of ITC. Goods or services received by a taxable person for construction of an immovable property. If 17(5) will be contracts, that is work contract related. 17(5) D will be construction of immovable property on his own account. Even though goods are used in the course or furtherance of business. Thus ITC and goods or services used in the construction of immovable property is blocked only in those cases where taxable person constructs the immovable properties for his own use. Even immovable property being constructed is used in the course of furtherance of business. In the given case, Shah Construction Limited has used the goods or services for construction of immovable property for other persons. So other persons, it is not for own account. They are providing for one of his clients. So hence ITC will be available. Next, third question. What is there in third answer? On conjoined reading of section 17(5)A and 17(5)AB, it can be concluded that ITC is allowed on repairs and maintenance services relating to motor vehicles which are eligible for input tax credit. Further, as per section 17(5)A, ITC is available on motor vehicles which are used for transportation of goods. Thus, ITC on maintenance and repair services available for Jaggi Motors for a truck used for transportation it finished goods is allowable to ABC Limited. So as per section, so they are provided three cases. They are provided for plant and machinery allowable, and second case it will be for other person, contact person is allowable, and repairs and services allowable. That both the three cases are blocked credit. Even though blocked credit, they are allowable. Next, ninth question. What is there in ninth question? In ninth question, they will explain that on 25th August, Mrs. Agrawal, a registered person of taxable goods located in Bangalore, purchased one machine for 12,39,000, including of IGST for one supplier of Maharashtra who issued the invoice on the same date. Okay, he purchased one machine and invoice was issued. Mrs. Agrawal put that machine to use the same day and avail the ITC of eligible amount. So machine was taken and ITC was claimed. Next, Mrs. Agrawal used the machine in the process of manufacture of taxable goods. So based on that, he is providing taxable goods. Okay. However, Mrs. Agrawal sold this machine to Mr. Suresh of Andhra Pradesh on 20 August on next year of 7,50,000. Whenever he is selling the product, he must require to amount what is ITC is taken on the capital goods. He must pay the tax of. They will provide based on two items. That is, for you may take that ITC based on 5% each quarter, or transaction value. What is the year transaction value? 750 into 18%, whichever is higher will be considered. So here there is a disposal of machinery artists which is taken as ITC. So with reference to section 18.6, determine the amount payable if any Mr. Agrawal and Agrawal at the time of sale of machine. So applicable rate will be GST 18%. So as per 18.6, if any capital goods or plant and machinery of which ITC has been taken by the person, he must pay the tax of higher of 2%, higher of 2 provided. 2 means what? That 2, 1 is related to 5% can claim, 5% ITC can claim. And question number 9th, I think, yes. As per section 18.6, if capital goods are plant and machinery on which ITC has been taken or supplied by the registered person, he must pay an amount higher than the following, that is ITC taken on such products, ITC taken on such goods by 9%, or part thereof. Sorry, just a second, why it was changing? Yeah, I have not changed, no. Okay. ITC on such goods reduced by 5% per quarter or part thereof from the date on issue of invoice for such goods, or tax and transaction value. Here transaction value will be, that is 7,50,000. Outward taxable determined under section 15. So accordingly the amount payable on supply of machine by the Mr. Agrawal and Agrawal shall be computed as follow. That is ITC taken on machine will be 12,39,000 into 18 by 118%. 18 by 118%, that is ITC taken 1,89,000. From 1,89,000 you will reduce some amount, that is which is related to 5% per quarter. So they are used for previous year 3 quarters and current year 2 quarters. So 1,89,000 into 5% into 3 quarters, and 1,89,000 into 5% into 2 quarters, that is 28,350, 18,900 will be reduced from that amount required to be paid by adding the reversal of amount to the output tax liability. So in the month of, if you are paying, this amount will be added to the output tax liability. Next, or duty leviable on transaction value 7,50,000 into 18%, whichever is higher, 1,41,750 will be liable to be paid. And amount payable towards disposal of machinery is higher of above. So thus Mr. Agrawal is required to be paid, Mr. Agrawal required to be paid an amount of 1,41,750 at the time of sale of machine. When he is selling the machine, he must pay the 1,41,750 is the liability. In addition to the above solution, amount payable towards disposal of machine has been computed on the basis of Rule 42. ITC to be reversed for the period of use of capital goods machine has been computed at the rate of 5% of every quarter or part thereof from the date of issuance of invoice. However, the said amount can also be computed in accordance with Rule 44.6. That is ITC involved in the remaining useful life in months of the capital goods or machine can be reversed on pro rata basis, taking useful life as 5 years. You may consider this also. Next question, 10th question. What is there in 10th question? In 10th question, sorry. Okay. 10th question was provided Krishna Motors is a car dealer. Okay, Krishna Motors is a car dealer selling car on international cars company. Okay, it also provided maintenance and repair services of cars sold by it also other cars. Okay, it seeks your advice on availability of ITC respect following expenses incurred by it during the course of its business operations. So they are providing. Okay, car purchased from manufacturer for making further supply of such cars. 2 of such cars are destroyed in accident while using the used for test drive by potential cars. When that is a destroyed goods, no ITC will be allowable. Next, work contact service available for construction of car parking shed in its premises. Car parking shed, it is not a plant and machinery. I think it is not a plant and machinery. So ITC will not be allowable. So in both cases ITC is not allowable as per section 16. So what is the answer was provided? Question number 10th, no? So answer will be as per section 16.1, every registered person can take credit of input tax credit on any supplies of goods or services or both to him which are used or intended used to be used in the course or furtherance of business. However, section 17.5 section 16 tells that you can claim, but section 17 tells that you not claim. Based on that, specify certain goods and services on which the input tax credit is not available in light of the foregoing provisions. The availability of ITC in respect of various expenses incurred by the Krishna Motors discussed below. What is they discussed? As per section 17.5a specifically blocks ITC on motor vehicles on transportation of passengers having approved seating capacity of not more than 13%. However, the same is allowed when the motor vehicle are used for the supply of such vehicles. Here only passengers is not allowed. If it is a goods, it will be allowable, and if it is used for furtherance of supply of services, then you may claim that ITC eligible for ITC. But however, the ITC of car purchased for manufacturing of purchasing supply is allowable, but however ITC on car fully destroyed in accident will not be allowed as ITC for discharged goods, whichever reason is specifically blocked credit under section 17.5h. Next, section 17.5c specifically blocks ITC on work contact services when supplied for construction of an immovable property. When you are constructing immovable property by using the items, in that items the ITC will not be allowable. It will be treated as blocked credit. But if you are constructing the plant and machinery, you can claim the ITC other than plant and machinery, except where it is a input service for furtherance of work of contact services. Since in this case car parking shed is not a plant and machinery, and work contact service is not used for furtherance of supply of work contact, so ITC is not allowable. In both the cases ITC is not allowed. In first case it is a destroyed product, so ITC is not provided. In second case it is a car shed, it is not a plant and machinery, so it is not allowable as deductions. Next question number 11. What is there in question number 11? With the help of information given below in respect of manufacturer for the month of September, compute the ITC credit to the electronic credit ledger for the month. Also compute the amount of ITC should be added to the output tax liability for the month of September. Ignore interest if any. So what they provided? Outward taxable supplies. Taxable goods 70,000 was provided. Okay. Capital goods 70,000 was provided. Outward supplies of exempted goods was provided. 40,000 was provided. So taxable goods 70,000, exempted goods 40,000. Total turnover will be 1,10,000. Next, inward supplies. Related to inward supplies, capital goods used exclusively for taxable outwards, that is 2,000. Okay, and capital goods used exclusively for exempted outward supplies, it will not be taken 1800. Next, capital goods used for both taxable and exempted outward supplies 4,200. Out of 4,200 it will be deducted, means common credit will be 4,200. 4,200 was calculated based on 60 years, and 60 years amount will be deducted for year when we are purchased manufacture for the month of September, and liability will be September, so same month, so divided by 60 will be calculated. If we done with this divided by 60, you will get the answer. So question number 11. What is there in question number 11? Answer will be ITC capital goods related to this product. Main product will be taken first. So computation of ITC credited to electronic credit ledger. How much will be credited? An amount of ITC to be added to the output tax liability for the month of September. So same month. So capital goods used exclusively for taxable supply. Exclusively for taxable supply, it can be allowable. So ITC 2000 will be allowable since used exclusively for taxable supplies. And when the exclusively for used for exempted product, it cannot be allowed as ITC claiming under rule 43(1). Next, capital goods used for both taxable and exempted supply, it is treated as common credit. So from common credit, you must deduct the amount which is common credit to the extent of export turnover, to the extent of exempted turnover, to the extent of exempted turnover. So common credit for the month of September will be 4,200. 4,200 divided by 60 will be 60 months. 60 months. For each month we will calculate. For first month we had there, so we will calculate it by using 60 months. 70 rupees. Common credit attributable to the exempted supplies in month of, that is 70 rupees into exempted turnover will be 40,000 divided by total turnover 1,10,000. That is 70 rupees into 40,000 into 1,10,000. That is 425.45 rupees is not allowable. It will be added back to the output tax liability. It will be added back to the output tax liability. Prior to the amendment, wide notification number 16/2020 dated 23/3/2020, class F of rule 43(1) provided that amount of ITC at the beginning of the tax period of all common capital goods whose useful life remain useful during the tax period shall be deemed as TR1 and shall be aggregate TM of all such IT capital goods. However, class F has been omitted wide said notification. Consequently, the term TR becomes redundant in the formula. So rule 43(1) will be considered. However, for the sake of computation of common credit attributable to exempted supply, value of TM has been used here. It may be noted that as per erstwhile class F of rule 43(1), value of TR1 is aggregated to TM. Next, what is there in next question? Here we have seen only the amount of credit whatever will be available divided by 60. Common credit divided by 60 and it will be reduced to the extent of exempted turnover. Next question will be 12th question. What is there in 12th question? In 12th question they will explain that X a manufacturer roofing sheets is having of 1,60,000 available with him on 1st June. He provides the following information pertaining to goods and services procured during the month of June. So in the month of June, input tax of raw material will be 40,000. 40,000 will be available for raw material, so it is allowable. Computation ITC will be allowable because it is raw material. The raw material is used for total both taxable and exempted activity. So it is used for both cases. It is treated as common credit to the extent of exempted supplies will be reduced. Next, after that input tax on catering services. Input tax on catering services procured for harvest caters in connection with its housewarming ceremony is 10,000. This catering services is a blocked credit, so it will not be treated as eligible ITC. Next, inputs on cosmetic and plastic surgery of manager of the factory 30,000. It is also not eligible. It is a exempted supply. It is related to input tax. It is related to CEO of the company, so it is not eligible. Next, input tax credit. Even though healthcare is exempted, but this cosmetic plastic surgery is not exempted. Next, input tax credit and input on raw materials used exclusively in manufacture of exempted supplies. If it is used exclusively for exempted supplies, it will not be eligible for ITC claiming. Next, total turnover for the month of June will be 60 lakhs exclusive tax. So 60 lakhs is the exclusively tax total turnover for June month. 60 lakhs is the normal turnover, and here 2 lakhs was provided for exclusively exempted turnover. So total turnover will be 62 lakhs in this case. Next, total taxable turnover. Next, compute the ITC available for the month of June and net GST payable for the electronic cash ledger by X. In the month of June, rate of GST will be 18%. So what can we do? Here the turnover will be 60 lakhs, that is taxable turnover, into 18%. It may be taxable amount, and deduct the ITC available. ITC available is available, that is based on 1,60,000 is the opening ITC. It will be reduced, and 40,000 will be reduced after the amount to the extent of exempted deducted. 40,000 minus to the extent of exempted turnover credit will be deducted, and that total amount will be deducted. Then you will get the net tax payable. You will pay is based on cash ledger. So answer, we will see the answer. 12th question answer. What is there in 12th question answer? Here they provided that 11th was completed. 12th, computation of ITC available and net GST payable for electronic cash ledger for the month of June. So first we will take the taxable turnover for the month of June. 60 lakhs into 18% taxable turnover. 10 lakhs 80,000 will be amount, and less ITC available for June month in terms of rule 42. What is there in rule 42? Opening balance will be taken first 1,60,000 and add ITC credit available for this month opening credit, and for this month 40,000, but this is 40,000 is includes of both taxable and exempted. So to the extent of common credit eligible for exempted will be deducted, that is 1,290. Less total amount will be 1,98,710. Total GST payable for electronic cash ledger will be 8,81,290. So how we will get the 1,290? Based on this, here input tax and raw materials. Raw materials input tax is allowable. Here both these raw materials using for taxable and exempted. So 40,000 is allowable. Next, input tax and catering of housewarming. Housewarming is not allowable. It is a blocked credit. Next, input tax and input contained in exempted supplies. Exclusively exempted supplies is not available. Next, input tax on cosmetic and plastic surgery of CEO of company. It is a taxable portion, so it is not eligible. Next, ITC credited to electronic credit ledger in terms of rule 42 of the month will be 40,000. This is treated as common credit, and ITC attributable to exempted supplies to be reversed, that is 1,290. How we will get the 1,290? Based on here, see with this answer 40,000 common credit into 2 lakhs will be the exempted turnover. That total turnover will be 60 lakhs plus 2 lakhs, that is 62 lakhs. 1,290 to the extent of exempted will be deducted. Next, note for being used in the course or furtherance of business, input tax on raw material is available as ITC is credited to the electronic credit ledger. So it is used for both furtherance of business, that is 40,000 related. Next, ITC and outdoor catering is blocked in terms of section 17.5. In terms of section 17.5, if the same the same is not used for making outward taxable supplies for outdooring catering services or an element of taxable composite or mixed supply, in the same he is not credited to electronic credit ledger. Next, input tax on inputs. Input tax on input used for making exempted, exclusively making exempted supplies is not available as ITC and thus not credited to the electronic credit ledger in terms of rule 42. Next, fourth one, ITC on cosmetic and plastic surgery is blocked in terms of section 17.5. If the same are not used for making the same category of outward supplies as an element of taxable composite or mixed supply, hence the same is not credited to the electronic credit ledger. Next, fifth point, since there is no input and input services which are used exclusively for affecting the taxable supplies, the entire ITC credited to the electronic credit ledger, that is 40,000, will be treated as common credit. ITC attributable to towards exempted supplies will be deducted based on that common credit into aggregate turnover of aggregate value of exempted sales divided by doing the period divided by total turnover during the tax period. So 40,000 into 2 lakhs divided by 62 lakhs, 1,290. After that 1,290 deduction, we will get 40,000 minus 1,290 and plus opening value 1,60,000, 1,98,780 will be get, and tax outward payable there is 10,80,000. He will pay the amount, remaining amount he will be payable. This is question number 12. Question number 12. Next, question number 13. What is there in question number 13? Here, Sarani Weavers at Pune, Maharashtra is registered input service distributor and intends to distribute ITC for the month of March. So, for the month of March, what they are providing, intended to distribute the ITC for the month of March. So, based on that branches, Ganganagar branch turnover will be 10 lakhs. It has specifically applicable to the branch 12,000, 3,000, 3,000. When it is specifically applicable, you must distribute specifically to that branch only. Next, Maduragiri branch Karnataka 5 lakhs. That turnover is 5 lakhs. Next, Kosali branch UP 15 lakhs. Specifically there is no amount. Next, Mumbai branch Maharashtra 20 lakhs. IGST will be 1,50,000, CGST 15,000, HGST 15,000. Next, ITC available on input services used commonly by all branches. So we need to distribute this amount. So 60,000 CGST, 60,000 HGST, IGST 1,000, 1,20,000. This amount will be distributed to the all persons. Next, ITC of IGST of 10,000 pertaining to March last year was inadvertently not distributed. So whether the same can be considered for distribution in March of this year? No, it is not allowable. Only the amount of same month will be eligible for claiming the ISD. Next, Maduragiri Karnataka branch uses input services to manufacture exempted products. Turnover exclude duties and tax payables to the central government and state government. Determine the manner of input taxable distribution. Even though they are providing exempted, you must distribute the amount to their products. Here we are in Pune branch. So Pune branch, and here Pune, who is there? Pune Maharashtra, and Mumbai branch Maharashtra register ISD, and Mumbai branch Maharashtra. If these two cases, they will become CGST and HGST, and remaining cases it will be IGST will be calculated. So question number 12, 13th question answer will be like this. We can write the answer of ISD will be distributed. If the ISD distributed, you must issue the invoice. So as per section 20, read with rule 39. Total GST credit. What is the GST credit? For the Ganganagar branch, they are specifically there. They are given the amounts 12,000, 3,000, 3,000 specifically required. So it will be transferred to that branch only. Ganganagar branch Rajasthan will be distributed as IGST credit 18,000 only to Ganganagar branch because they are specifically provided. And next, one Mumbai branch also they are provided. Mumbai branch also specifically attributable to Mumbai branch Maharashtra will be distributed IGST credit of 1,50,000, CGST 15,000, HGST 15,000 respectively only to the Mumbai branch. And respectively they are provided some amounts like 60,000, 1,20,000 will be the common credit. So this amount will be distributed among three branches. Will be distributed, and Mumbai branch Maharashtra in proportion to their last quarter. In proportion to their last quarters. Here we will be distributed to four branches in proportion to their turnovers. In one case will be CGST, HGST will become, that is Mumbai branch, that is Maharashtra, same state. In remaining cases it will be IGST credit. So Ganganagar branch Rajasthan will be get that 48,000 into 2,40,000 its turnover. Total will be 2,40,000. How it is 60,000 CGST, 60,000 IGST 1,20,000 and IGST 1,20,000. Total 2,40,000 will be become 2,40,000 common credit into Ganganagar branch turnover will be 10 lakhs, and total turnover, if you added the total turnover 10 plus 5 and 5 plus 15 it was 10 15 15 15 plus 20, 30 30 plus 20 it will be 50 lakhs will be a turnover. So 10 lakhs divided by 50 lakhs, 2 lakh 40 is the common credit. Next 2 lakh 40 is the common credit into 5 lakhs divided by 50 lakhs. Next Kosali branch 15 lakhs, that is turnover will be 15 lakhs, that is 1 lakh 20 common credit into 15 lakhs divided by total turnover. And Mumbai branch, here Mumbai branch will be apportioned between CGST, HGST, IGST, CGST, HGST, IGST, because there is in same states. Next ITC of 10,000, that is last year cannot be distributed in March this year, has ITC available for distribution in the month of is to be distributed in the same month, they are not allowed. So when you are distributing the amounts, if you have in the same state, they will be distributed to same like as CGST, HGST. If you are in different states, you must distribute as CGST. If you the amount related to last year, if we are not provided that IGST, if we are not provided that claiming that distribution is not allowed for the last month, distribution is allowed only for the same month. Next question number 14th, what is there in question number 4th? George Private Limited, George Private Limited, a registered supplier of goods at Kerala, who pays GST under regular scheme, regular scheme, he made the following transaction, that is exclusive of tax during the tax period. Purchase was 5 lakhs and sales was 10 lakhs. IGST rate was 18 lakhs. Okay, purchase made from registered person New Delhi and sales made to registered person in New Delhi, that is same states. CGST, HGST will become no problem. Next purchase made from unregistered person in Trivandrum, Kerala. So Kerala person 2 lakh 50 and 8 lakhs turnover, sales made to registered person in Trivandrum. So no issue, the company completed the above information. The company has completed all the conditions for availing the ITC. The further information regarding the various opening balances was provided. So they are provided opening balances. Related to opening balances, what is their? CGST 50,000, interest 1500, penalty 500. Okay, HGST 30,000, interest 1500, penalty 500, and IGST 1 lakh, interest 2,000, penalty 500. Here we will be calculating. Sales was 10 lakhs and 8 lakhs. So 10 lakhs will be IGST, 10 lakhs will be IGST livable, and 8 lakhs will be CGST, HGST will be livable, because we are at Kerala person. We are a George Private Limited will be Kerala person. So on 10 lakhs 18%, 1 lakh 80, and 8 lakhs it will be 9%, that is maybe 72,000 it will be become. This is the output tax payable. And output tax payable, you can claim the ITC available. So ITC available, what is there in ITC available? We have CGST, HGST and IGST amounts. So we have IGST payable was 1 lakh 80, 10 lakhs into 18%, it will become 1 lakh 80. Okay, 1 lakh 80 is output payable, and ITC carry forward to the next period. If any amount was there, we will claim. Next, what is the ITC available during the tax period to be set off? Based on that we will get. Next, what is the ITC available? This is opening ITC was provided, that is tax of 50,000, 30,000, 1 lakh is the opening balance, and we have purchased from 5 lakhs from New Delhi. New Delhi means it is a IGST. So 5 lakhs into 18%, that is 90,000, I think so. 90,000, 1 lakh opening 1 lakh plus 90,000, 1 lakh 90. But we would to pay only 1 lakh 80. 10 lakhs into 18%, 1 lakh 80, and credit available 1 lakh 90. So fully utilized 1 lakh 80, and there will be eligible for 10,000 eligible. That 10,000 of IGST you may utilize it for CGST or HGST, or only for CGST or only for HGST. You can claim any one. Next, 2 lakh 50 is there. For the 2 lakh 50 is related to CGST, HGST, because we are in Kerala person. 2 lakh 50 into 9%, I think so it will be 72,000. It may become whatever the amount ITC was there. So it will be 2 lakh 50 into 2 lakh 50 into 9%, I think 22,500, 22,500, and we should pay the amount of 80 lakhs into 9%, it becomes 72,000. So 72,000 amount will be deducted, and eligible IGST come from 10,000. 10,000 will be utilized any person, that is CGST or CGST person or SGST person, or both the persons may utilize it. Next, answer will be seen. So answer, what is the question number? Question number, it was 14th question, I think so. 14th question answer. 14th question answer. What is there in 14th question? 13th was completed. 14th, computation of net CGST, SGST and IGST for the electronic cash ledger by George Private Limited for the tax period. So sales made outside Kerala, we are the Kerala person and we made the New Delhi, so we will pay the IGST 10 lakhs into 18%, IGST 18 lakhs, 1,80,000. Next, sales made to Trivandrum, that is 8 lakhs into 9%, 9%, 72,000, being intrastate sales, the same is liable to CGST and SGST. Next, less ITC available during the tax period for set off. What is there in set off? That is, we purchase the items. So on purchase we get the IGST of 1,90,000, so we can utilizing 1,80,000 for IGST liability, and remaining IGST we utilize it for SGST amount. After that, CGST is 72,000 and SGST is 52,500 will be utilized. Net tax liability payable in cash 9,500 will be payable SGST, and it is to be carried forward to the next tax period. How much will be tax period can be carried forward? 500 will be allowable, and remaining CGST, SGST will be nil. Next, working note, ITC available during the tax period is computed as follows. Opening balance of ITC was provided. They were provided 50,000, 30,000, 1 lakh, and purchase was made from New Delhi. New Delhi is IGST, interstate. So 1,90,000 will be going to 90,000. Next, purchase from Trivandrum 2,50,000 into 9%, 72,500, 52,500. It was became 52,500. See, because here CGST was more amount, so that IGST was utilized for paying the SGST amount. Note, since sufficient balance of ITC of CGST is available for paying CGST liability, and cross utilization of ITC of CGST and SGST is not allowed. ITC of IGST has been used to pay SGST. After paying SGST liability, you must pay first IGST liability, as credit of CGST and SGST can be utilized only after IGST credit has been fully utilized. First, you must complete the IGST credit. After that, you will be payable for CGST, SGST. For IGST credit, you may use for any head. That is, you may use for CGST or SGST. Next, they are provided interest and penalty paid are not available as credit for payment of output tax liability under GST. It can be paid. It can be used only against corresponding interest penalty used in the GST law. It cannot be allowed as credits. So that was provided in question number 14. Next question was question number 15. What is there in question number 15? In question number 15, we will talk about that there is a question number 15. Okay, 15. Quantama Enterprise is not required to register under CGST Act. So they are not required for CGST Act. However, it applied for voluntary registration on 17th September. So the government was provided for voluntary registration. Registration certificate has obtained to the firm on 25th September. We applied 17th September and we got the registration 25th September. Okay, the CGST and SGST liability of the firm for the month of September will be 24,000 each. That is CGST 24,000, SGST 24,000. This is the liability, output tax liability for the month of will be 24,000. Okay, the firm is not engaged in making interstate. Is not making any interstate provided. Next, and it has capital goods. The firm is not engaged in making interstate stackable. Okay, Quantama Enterprise provided some that information. What the information was they providing relating to capital goods and input held in stock by it as 24 September. So we got the registration on 25th September, and immediately preceding the date, they are providing the input related. In this input related, this is a voluntary registration. So we can claim the inputs related to the goods which is having preceding the data, immediately preceding the data. For this products, we can use only relating to finished goods or working progress goods, but not for capital goods related. So what is the information provided? Input procured on 2nd September. Input was procured on 2nd September, was lying in stock. That is 4,500 is lying. So you can use for that amount, no problem. Next, input received on 21st July contained in semi-finished goods held in stock. So it is also allowable. Finished goods are lying in semi-finished goods is allowable. So 4,500, 7,500, CGST, HGST, total 12,000 is allowable. Next, value of inputs contained in finished goods held in stock 2 lakhs. Such inputs were procured on 19th September last year. Invoice of the goods was also issued on the same day. So it is related to procured prior to 1 year. Here that amount will be procured prior to 1 year. It is not allowable. It is not allowable as a claiming ITC. Next, input value at 50,000 procured on 13th September lying in stock, IGST 18%. So it is in same month, so allowable. 9,000 will be allowable. It is a IGST. Next, capital goods procured on 12th September. That is 12,000. It is not allowable. That is 12th September. On 12th September is not allowable. Okay, what are the amount is eligible? 12,000, 4,500, 7,500. It will be 12,000 and 9,000 IGST. So it is allowable amount. And what is the output liability? We got that output liability will be 24,000. So for the 24,000 we can pay the based on 12,000 and IGST will be 9,000. This IGST we can use for CGST, HGST, or we can use for only for CGST, or we can use only for HGST, whatever apportionment. First utilize for IGST amount. After that you can utilize it for any amount pending. So in question what they are given, they are used. Question number 15th. Computation of GST, net GST payable for electronic credit ledger by Quantama Enterprise for the month of September. That is output tax liability for the month is 24,000 which is provided. Less ITC available. Let ITC is available 12,000 and 9,000 of IGST. So first IGST liability, IGST credit first utilized. So IGST credit was utilized for the CGST amounts. To CGST amounts 12,000 and CGST 12,000 payable. Next, net GST payable will be 3,000. Cash will be payable 3,000 CGST, HGST 12,000 will be payable. Next, note. See, credit of IGST is first utilized. Credit of IGST is first utilized towards payment of IGST, and thereafter for CGST and HGST in any order and in any proportion. Credit of CGST and HGST can be utilized only after IGST credit has been utilized. Must utilize first IGST credit as per Rule 88A. Next, since Quantum Enterprise does not make any interstate supplies in the above answer, the entire credit of IGST has been utilized towards payment of CGST. Credit of IGST can also be utilized against HGST liability also, or against both CGST or HGST in any proportion, and the final answer will be changed accordingly. There may be, you can use any proportion, they will allow. So answer will be changed, but liability will be same amount will be exist. Next, as per section 18(1)(b), a person who is taken voluntary registration is entitled to take credit on input tax on respect of input held in stock and inputs contained in semi-finished and finished goods held in stock on the day immediately preceding the date of granting of registration, and thus however he cannot take ITC in respect of capital goods held on the day immediately preceding the date of granting of registration. In capital goods only the 2 persons will be allowable, that is composition to normal person, and exempted become taxable. Only the person will be eligible for capital goods ITC, and they will be reduced for 5% for every quarter. Next, ITC on input needs to be available within 1 year from the date of issue of invoice by the supplier. 18.2. Next, in this case, since Fontana Enterprise has been granted voluntary registration on 25th September, it will be entitled up to the stock on 24th September. In view of the said provisions, eligible ITC for Quantama Enterprise is computed as follows. Input held in stock since 2nd October 4,500. Next, inputs received on 21st July contained in semi-finished goods held in stock 7,500. Next, input in finished goods held in stock which are procured on 19th September last year, that is nil. It is not provided, that is prior to 1 year. And input held in stock since 13th September IGST will be allowable. Capital goods is not allowable for voluntary registrations. So it is 12,000, 9,000. That 9,000 IGST will be first utilized, because here there is no IGST payable. It may be used for CGST or SGST, whatever portion if you want you can use. Next question will be 16th question. What is there in 16th question? In question number 16, B&D company, a partnership firm in Nagpur, Maharashtra, is a wholesaler of taxable products P and product of Q exempted. So he is providing two products. P is product taxable product, Q is exempted product. By way of notification, the firm supplies these products only in the eastern part of Maharashtra. All the procurements, both goods and services of the firm for supplier registered under regular scheme in the state of Maharashtra. Okay. The firm pays tax under composition scheme. It is paying tax under composition scheme. Okay. And composition scheme, B&D company has furnished the following details with respect to its turnover and stock. So particularly related to P and Q. P is a taxable product, Q is a untaxable product. Turnover for the quarter end 30 June, turnover for the quarter end 30 September. They are provided the turnover of 60 lakhs, 50 lakhs, 17 lakhs 65,000, 17 lakhs. Okay. Particular stock has an 30 June and stock has an 30 September. 30 stock has an 31st October 3 lakh 60, 1 lakh 20. So here this person is a composite person. They told that under regular scheme the firm is paying tax under composition scheme. This composition scheme is available for who is the person having turnover less than 1.5 crores, that is 150 lakhs. But here this is a person in special category state, that is Nagpur state. So here it will be available for 75 lakhs. If the amount of turnover exceeds 75 lakhs, as on date exceeding, he will have the paying tax on normal rate. So he will pay the tax on normal rate. Then whatever the ITC available on that day, he may claim under normal registration as over the normal person is available, and in this case in capital goods also available. So next here what is the turnover? 60 plus 50, 160, 17.65, 13 June. Next 50, 170, it will cost 75 lakhs. It will cost 75 lakhs. So it will come under normal category. But he is in which state? Nagpur, Maharashtra. I think Maharashtra is not there in that special category state. Special category states only for states of special category states except Himachal Pradesh, Assam, Jammu Kashmir. It is not a special category state because it is a north and eastern state. He is telling no. So Maharashtra, its turnover will be 1.5 crores. Here the turnover will be 60 plus 50, 110 plus 17, 34, 110 plus 1 crore, 144. So there is in boundary of 6 lakhs. If when they as and when 6 lakhs is crossed, 150 lakhs is crossed, then they will be liable for GST. They will be liable for pay the tax on normal tax rates. So upon that 144 it became. Next, what they provided, their sales from October, okay, 2 lakhs, 1 lakh 33, 1 lakh 33, it will become 3 lakh 33. Second, 67,000, and third 58,750. I think so. Third October it will cross, because 2 lakhs, 1 lakh, 3 lakhs, 3 lakhs plus 60, 3 lakhs 60 plus 730, it will become 3 lakhs, 3 lakhs, 4 lakhs, and 58,000, 4 lakhs something 50. So we are in boundary of 46. So when this attached to 4 lakhs 80, 4 lakhs something, it will cross the amount of eligible composition scheme. So I think so 3rd October it will be crossed. After 3rd October you will liable to pay tax on normal cases, and up to this we have the products, we have the stock, and as on 30 June and as on 30 September, as on 31st October, you can claim that ITC. The entire stock of product P and Q available with from 30 September is purchased during the said half year, except a consignment product P valuing 3 lakhs, which was purchased in the April month of preceding financial year. If you purchase within 1 year will be used. If you purchase before 1 year, it is not allowable for ITC claiming year. Next, the said stock could not be sold during the month of October. In the current financial year, in the month of October, no purchase were made, and the product were sold with profit margin of 20% of sales. Next, X tax was provided, turnovers were provided, P and Q, total value of products. Okay, total value of product. All the above amounts are exclusive of tax wherever applicable. Compute the ITC of creditor to electronic credit ledger of the B and D company when it exists. They only telling that there is existing composition scheme and becomes liable to pay tax under regular scheme in accordance with provisions of section 18(1)(c). So make suitable assumptions whenever required. So stock is valued at cost price. So question number 18th. Before that, okay, question number 18th. See the answer of question number 18. What is there in question number 18th answer? Question number 16th answer. 16th. 11, 12, 13. It was completed. Yeah. Darling. Okay, 16th question. What is there in 16th question? Here, as per section 10(1), as per section 10(3), amended, the option availed by the registered person to pay tax under composition scheme shall lapse with effect from the day on which the aggregate turnover during the financial year exceeds 1.5 crores. 75 lakhs in case of special category state, 75 lakhs in case of special category state, except that cases of Assam, Himachal Pradesh, Assam and Jammu and Kashmir. Hajj. Next, as per section 2(6), what is meant by aggregate turnover here? Aggregate turnover means the aggregate value of all taxable supplies or taxable liabilities, but exclude the reverse charge mechanism, that is inward supplies on which tax is payable by a person on reverse charge basis, and add exempted supplies, and add export of goods or services or both, and add interstate supplies of persons having the same fund to be computed all India, but exclude the tax component, that is CGST, SGST, UGST, IGST and compensation cess. In the given case, the firm is registered under composition scheme in the state of Maharashtra. The aggregate turnover for the firm exceeds 1.5 crores on 3rd October. That is aggregate turnover, both the taxable and exempted turnover will be computed as like this. For 1st April to 3rd October, that is 144,65,000 plus 2,03,000 plus 1,38,250 plus 1,06,250 plus 92,500. On 3rd October it will lapse. From 4th October it will become normal person. Up to that up to that whatever input is there, he can claim. On stock finished product he may claim, and stock work in progress he may claim. On capital goods he may claim. Based on that 5% will be reduced for each quarter. Next, as per section 18(1)(c), read with rule 40, where any registered person ceases to pay tax under section 80, section 10, he shall be entitled to take credit of input tax in respect of input held in stock, input contained in semi-finished or semi-finished goods held in stock, and capital goods on day immediately preceding the date for which becomes liable to pay tax. And under section 10, only capital goods is allowable for 2 persons, that is exemption to taxable person became, or composition to normal person became. But in two cases, who is registering for normal registration or voluntary registration or liable for registration, they will not allow for capital goods ITC. Next, further ITC and supplies of input and capital goods shall not be available after the expiry of 1 year from the date of issue of tax invoice. If the tax invoice 1 year was lapsed, the ITC is not available. In the light of the above mentioned provision, the ITC credited to the electronic credit ledger of B&D company of inputs held on 2nd October will be computed as under. So it was became the normal person on 3rd October. Preceding the day will be 2nd October. Up to 2nd October, what is the transaction sum? That is stock of taxable inputs as on 30 September. It will be taken for previous quarter. Thus, since no tax is paid on exempted purchases, there does not arise any question of availing ITC on the same. Hence, stock of only taxable input is considered 10 lakhs. Next, add the purchases if any made in October. Next, less cost of goods sold for October to 2nd October. 2 days cost of goods will be reduced, but here we will be consider only cost value, that is 80% will be considered, 20% is not considered. Why? Because 20% is not considered, that is cost was already inflated by 20%, that is profit margin is 20%. So profit margin we will not take for the cost of goods sold. So 80% will be taking for 2 days. 2 lakhs plus 1 lakh 33 plus 67,000 into 80%. That is what is this amount? 2 lakhs, 1 lakh 33,000, 67,000. But that is related to product Q. That is related to product Q. Product related to product P related amount. So it was product P amount. So which is taxable amount. So taxable amounts. Next, stock of taxable inputs as on 2nd October. Whatever the amount is there in 2nd October, since the bills number in continuation, it can be concluded that no sales are missing for the X tax. It will be 6 lakhs 80. It will become 6 lakhs 80. Next, less stock with invoice issued prior to 1 year. Stock was issued, that 1 lakh P is issued 3 lakhs, which is used for the April month in the preceding financial year, 3 lakhs. So prior to 1 year, less, 3 lakhs will be less. Stock of input on which ITC can be claimed, 3 lakhs 80 is available. You can claim on 3 lakhs 80. Next, on 3 lakhs 80, 9% will be allowable as ITC claim for current year. Claiming of current year. Okay, and this 6 lakhs 80 will be that the stock has on 31st October, but we are in 2nd October, so we will be taking that not allowable 6 lakhs 80. And if this 1 year stock is already lapsed, it will not be allowable, so it was reduced. Next, question number 18th. What is there in question number 18? Question number 17, I think so. What is there in question number 17? In question number 17, XYZ Private Limited is a manufacturing company registered under GST. In the state of Uttar Pradesh. It manufactured 2 taxable products, alpha and beta, and 1 exempted product, gamma. So he is producing 3 products, 2 taxable products, 1 exempted product on 1st October, while product beta got exempted through an exemption. So which is a taxable product became exempted, and exemption available on gamma got withdrawn on the same date. So one product became the taxable product became exempted product, exempted product became taxable product. And when the person his exempted product became taxable, on that ITC, on that product ITC, that is stock or finished goods, or ITC on work in progress, he may claim as ITC on that related to exempted product. Next, the turnover of alpha, beta, gamma in the month of October 9 lakhs, 10 lakhs, 6 lakhs. So alpha turnover will be 9 lakhs, beta turnover will be 10 lakhs, gamma limited turnover will be 6 lakhs. Next, XYZ Private Limited has furnished the following details. What is this information? Whatever they used in the business, they are provided the information relating to that. Okay. Machinery U purchased on 1st October for being used in manufacturing of all 3 products. So it is all 3 products, means exclusively used for both 3 products. So it is first we will be taken because it is a common credit ITC. So 36 lakhs will be considered. Next, machinery V purchased on 1st October for being used in manufacturing of product alpha and gamma, one taxable and one exempted. It is also common credit related, so it will be taking. Next, machinery Z W purchased on 1st October being exclusively used in product of beta. Beta is a exempted product. When used for exclusively for exempted product, it will not be allowable, so it will not be taking for ITC calculation. Next, machinery Y purchased on 1st October. Machinery Y purchased on 1st October 4 years ago for being used. So you must consider only prior to 1 year from the tax invoice. So it was a 4 years case. It is not available for calculation purpose. Next, machinery Z purchased on 1st October 2 years ago. That this ITC also not useful for calculation. But these 3 items will be common credit items. Next, raw materials used for manufacturing alpha purchased on 5th October. 27,000. It will be considered for ITC. 27,000 will be considered ITC. Next, raw material used for manufacturing of beta purchased on 10th October. Beta 36,000. Beta is related to exempted product, so it will not be considered. Next, raw material used for manufacturing gamma. So it is eligible product. It is a taxable product. 18,000 will be considered. So what is the year amount of credit eligible credited to electronic credit ledger for the month of October? For the month of October, it will become what is added? 36,000 is added. Next, 18,000 is added. Next, 20,000 is 27,000 is added. 18,000 is added. It may become 99,000 for the month of October. This is related to October month. It is aggregate of total amount of for the month of October. But out of this, this 36,000 and 54,000 and 36,000, 54,000, 72,000, whatever is there, no, which is exclusively used for beta, that products, they may be have their in aggregate common credit. So on this aggregate common credit, you must remove that whatever the amount related to exempted supplies amount. So next, calculate amount, compute the following amount of ITC to be credited to electronic credit ledger for the month of October. For the month of October means it was 90,000, which was already calculated. Next, amount of aggregate value of common credit. Aggregate of common credit means which are used for both the purchase, both the values. That is machinery U and machinery Z and machinery Y. that is common credit, it will become common credit. Next, common credit attributable to exempted supplies for the month of October. Whatever the amount we will calculated, that is for 3 items which is used for that amount, and it will be divided by 60, it will become common credit for the month of October. Next, GST liability for the of the company payable through electronic cash ledger for the month of October if opening balance of ITC is nil. If ITC is nil, whatever amount it is required to pay. As per ITC, we have 99,000 and we should be pay after the common credit utilization is completed from IGST payable. So it is that on that what is there on the month of October, 9 lakhs, 10 lakhs, 6 lakhs. So on 9 lakhs we will to pay 18%, 1,62,000. Beta will become exempted, so no tax will be arised. Gamma with 6 lakhs into 18%, 1,08,000. So total output liability will be 2,70,000, and 2,70,000 for the month of credit is available 99,000 deducted, and whatever the common credit we got, that amount will be deducted. After that we will pay the amount through electronic cash ledger. Question number will be seen this answer. This is question number 17. So answer will be seen that answer is 17th question answer. 17th question answer. What is there in 17th question answer? Okay. First, amount of ITC credit to electronic credit ledger for the month of October. So here we will take what is machinery U, that is 36,000. Machinery V, 18,000. Machinery W you cannot take, Y you cannot take, Z we cannot take. U, Y, Z it will be taken for common credit because this is not related to for this month. Next, raw materials used for manufacturing alpha, it will be considered, and manufacturing of beta it is not considered because it is not taxable, it is exempted product. Next, raw materials used for manufacturing gamma, it will be considered. So total amount credit electronic credit ledger available for the month of October will be 99,000. Next, aggregate value of common credit. What is the common credit available? That 3 items which is W, Y and Z. That is W, U, Z, Y. That is 36,000, 54,000, 72,000. This is aggregate value of common credit. And on this aggregate value for the month of October means 1,62,000 divided by 60. It will be 1,62,000 divided by 60. It will become 2,700. This is common credit available. Common credit for the month of October. Next, common credit attributable to the exempted supplies. Exempted supplies for the month of October. It will become whatever the common credit exists. 2,700 into whatever the exempted turnover divided by total turnover will be considered. Exempted turnover will be that middle product 10 lakhs is there, and total turnover will be 25 lakhs. So 1,080 rupees will be the common credit exempted supplies. Next, computation of GST liability on common credit exempted survey. This amount will be reduced because it is not allowable. It is a blocked credit. It is not allowable. Next, IGST payable alpha will be payable 9 lakhs. Exempted beta will be exempted. This is have 10 lakhs. 9 lakhs plus 10 lakhs plus 6 lakhs, that is 25 lakhs. Here we will be taken 25 lakhs. Next, 18%, 6 lakhs is 18%, 1,08,000. Total IGST payable and outward supplies, that is 2,70,000. And common credit attributable to exempt supplies for the month of October, 1,080 rupees. 1,080 rupees. It will become total output tax liability of October will be 2,71,080 rupees. This is added back to the output tax liability, which is common credit, which is utilized for that years, that month. Next, less ITC available in the electronic credit ledger, 99,000. So IGST payable from electronic credit ledger will be 1,72,080 rupees. Next, notes. ITC in respect of capital goods used commonly for effective taxable supplies and exempted supplies denoted as A above. Next, shall be credited to electronic credit ledger. Next, as per rule 43 1 C. Next, ITC in respect of capital goods used are intended to be used exclusively for effecting supplies other than exempted supplies, but including zero rated supplies shall be credited to the electronic credit ledger. Next, ITC in respect of capital goods used are intended to be used exclusively for effecting exempted supplies shall be not credited to the electronic credit ledger. So here what we are telling, this 3 point, which amount to be added to the electronic credit ledger. For the purpose of electronic credit ledger, we should add which is the affecting of taxable supplies and exempted supplies commonly used product, and which is using for intended use that amount, and which is exclusively used for exempted, it will not be added. That is first 3 point. Next, fourth point, machinery Y is being used for effecting both taxable and exempted supplies from October. Prior to that, it was exclusively used for effecting taxable supplies. Therefore, ITC in respect of such machine would have already been credited to the electronic credit ledger. So it will not be considered now, machinery Y. Next, fifth point, machinery Z. Machinery Z is being used for effecting both taxable and exempt supply from October 2 years ago. Therefore, it is already created. So for the month of October, it will not be considered. For the common credit, it will be considered. Next, question point 6. ITC in respect of inputs used for effecting taxable supplies will be created in electronic credit ledger. ITC in respect of inputs used for effecting exempted supplies will not be credited to the electronic credit ledger, which is a exclusive use of electronic exclusively for exempted, it will not be considered. Next, point number 7. The aggregate of amount of A credited to the electronic credit ledger in respect of common capital goods which useful life remain during the tax paid to be denoted TC shall be common credit in respect of such capital goods. Next, point 8. Where any capital goods in which were used exclusively for effecting taxable supplies are subsequently also used for effecting exempted supplies, the ITC claimed in respect of such capital goods shall be added to arrive at the aggregate value of common credit. Next, point number 9. ITC attributable to the month. Month means we will consider for commonly 60 months. For the month, if you are divided by 60, so 1,62,000 divided by 60, 2070. This is 1,62,000 is related to 3 items. The useful life of any capital goods shall be considered as 5 years. From the date of invoice, and the said formula shall be applicable during useful life of the said capital goods. Next, 10th point. The amount of common credit attributable towards exempted supplies shall be denoted TE and shall be computed as like this. That is, common credit is available into aggregate exempted value of supply divided by total turnover, that is 2700 into 10 lakhs divided by 25 lakhs, that is 1080 rupees. Next, point number 11. Common credit attributable to the exempted supplies along with the applicable interest shall during every tax paid of the useful life of the concerned capital goods be added to the output tax liability of person making such claim of credit. Next, prior to the amendment, Y notification number 1620 is dated on 23/3/2020. Class F Rule 43B provided that amount of ITC at the beginning of tax paid on all common capital goods whose remaining useful life will be considered for tax paid being donated and shall be aggregated TM of all such capital goods. However, class F has been omitted now. Consequently, the term of TR become redundant in the formula. However, for sake of computation of common credit attributable to exempted supplies, value of TM has been used higher. It may be worthwhile. Next, question number 18. What here we have done means, we have calculated for the month of credit and for common credit, and out of the common credit how much is reversal, or it will be added back to the output tax liability. If we are added back to the output tax liability, and eligible ITC will be reduced from that, and we have paid the amount of cash ledger using the cash ledger. Next, question number 18. What is there in question number 18? In question number 18, all-in-one stores. All-in-one stores is a retail chain department. Okay, what is the what providing? It is providing both exempted and taxable, as well as taxable. So it is providing both the amounts, exempted and taxable. The store operates rented properties. All-in-one store pays GST under regular scheme. Okay, he is paying an regular scheme. In Mumbai, the store operator is rented complex, a part of which is used by the owner of the store for purpose of residential purpose. So he is using for residential purpose. All-in-one stores was explaining. Mumbai furnishes the following information. So he is furnishing the following information relating to all-in-one stores. That is, Mumbai furnishes the following details for the month of aggregate turnover, aggregate value of various items sold in the store. So taxable item will be 42 lakhs. So total taxable value how much? 42 lakhs. Okay. In items exempted wide notification, it was 12 lakhs. Item exempted notification 12 lakhs. Okay. And items not levied GST, that is 3 lakhs. 42 is the taxable item. Exempted will be 12 lakhs. Item not leviable to GST will be 3 lakhs. Okay. Next, Mumbai stores transfers to another all-in-one store located in Goa certain taxable items for the purpose of distributing the same as free sample. So the value declared in the invoice of such item is 5 lakhs. Such items are sold in Mumbai store at 8 lakhs. So there is some value which is sold by other store, and Mumbai was transferred these items. So which is not included in our turnover. So our turnover will be become that, which is 42 lakhs plus 8 lakhs. 42 lakhs plus 8 lakhs. 42 lakhs plus 8 lakhs plus items not levied to GST 3 lakhs. 42 plus 8 plus 3 lakhs. It was considered. Next, aggregate value of various items procured for being sold in the store. So sold in the store. So what is this? Aggregate value of various items procured for being sold in the store. We are providing store. We are selling the source. Items sold in the store. Various items procured for being sold in the store. Taxable items 55 lakhs. So 55 lakhs is the taxable items. Okay. Items exempted wide notification will be 15 lakhs. It is exempted notification. Next, items not leviable to GST 5 lakhs. So it is no GST will be payable, and above also no GST will be payable. Next, fine paid to Goods Transport Agency GTA for inward transportation for taxable items. So 1 lakh. 1 lakh it will be payable to reverse charge mechanism. GTA means 5% will become. So 1 lakh into 5%, 5,000 will be liable, and 55 lakhs whatever the taxable liability, it will be payable 55 lakhs into tax rate. Next, fine paid to GTA in what transportation of exempted items. So it will be also payable out of cash. So 80,000 into 5%, that is 4,000 will be liable. Fine paid to GTA for inward transportation of non-taxable items, 20,000 into 5%, that is 1,000. So 5,000, 4,000, 1,000. This is related to GTA, which is required to be payable in cash in reverse charge mechanism. 5 plus 4, 9, 9 plus 1, 1,000. So 10,000. 10,000 will be payable in cash. It is related to reverse charge mechanism. Next, monthly rent payable monthly rent payable for the complex will be 5,50,000. 5,50,000. 1/3 of total space available is used for personal resident. 55 lakhs even though you use for residential purpose. Okay, you are using residential purpose, you must paying the tax amount, total amount. So 55 lakhs into whatever the tax rate will be available. This is related to service, it will be 18%. So 55 lakhs into 18%, 99,000 is payable. Next, activity of packing the items and putting the label of store along with the sale price has been outsourced. Amount of paid for packing of all other items 2,50,000. So 2,50,000 into this is service, related to service, so 18%, 45,000 will be payable on GST. Next, salaries paid to staff, regular staff at the store. So salaries, there may be employer-employee relationship, so no GST is liable on the salary. Next, GST paid on inputs used for personal use. Whatever the amount you are paying, first you will be liable, so 5,000 will be liable. Next, GST paid on rent a cab service available for the business purpose, so 4,000. It will also tax involved, mottam there will be tax involved. Next, GST paid on items given as free sample 4,000. It is also available for total tax. So whatever amount we are taking, 4,000, 8,000 plus 5,000, 9,000, 2 lakhs is not liable, and this amount 2,50,000 into 18% for 45,000, 5,50,000 into 5, the amount, it will all are included. Next, given above details facts, you are required to compute the following. Input tax credit credited to the credit ledger. How can we calculate this input tax credit eligible for? After the output tax liable deducted by input tax credit for electronic credit ledger will be calculated. Next, common credit will be calculated. Okay, common credit will be, how we will calculate the common credit? From total credit we will deduct some credits related to that, it will be calculated. Next, ITC attributed towards exempted. Towards exempted means total common credit into total exempted turnover divided by total turnover, we will get the ITC attributable to exempted turnover. Next, eligible ITC out of common credit. Eligible ITC out of common credit, you will get this amount based on that what is the amount of credit available minus what is related to that exempted common credit is there, no, that amount will be deducted, you will get the eligible ITC of common credit. Next, net GST payable for electronic cash ledger for the month if the opening balance of ITC is nil. Net balance, what will be net balance we will get for the based on the above information, whatever the sale was came, whatever the liability was came, from that you deducted the amount of ITC, whatever the ITC if you get in D pointer, it will be become tax liability. Next, note, wherever applicable GST under reverse charge mechanism it will be 5%. So in case of reverse charge mechanism it will be 5%. One store rate of GST in all other cases will be 18%. So 55 lakhs into 18%, and some cases is there no monthly rent, packing charges and personal purposes they are used, that all are liable for 18%. All inward supplies are procured from a registered person, so you will get the ITC on whatever the purchase you have made. Subject to information given above, assume that all the other conditions necessary for availing ITC has been fulfilled. So we will calculate the amounts. First of all, answer will be question number, I think it is the 18th question. So 18th question answer. What is there in 18th question? Computation of ITC credit to electronic credit ledger. It will be calculated as per rule 42. What is there in rule 42? The ITC in respect of input or input services being partly used for the purpose of business and partly for other purposes, or partly used for effecting taxable supplies and partly for effecting exempted supplies, shall be attributed to the purpose of business or for effecting the taxable supplies. ITC credited to the electronic credit ledger to register person. That is, here we will calculate based on C1 is equal to T minus T1 T2 T3. T means what? Total input tax involved in on inputs and input services in related to tax paid. That is, whatever the amount we are calculated now, that is whatever tax is calculated, whatever the tax was come, that is T. Next, T1 means related to only non-business purposes. There is non-business purpose, that is rent was personal use, some rent was personal use, and some GST for personal use is there, no, that is non-business purposes. Next, T2 will be related to effecting of exempted supplies. Here there are the exempted services relating to some GST, GTA cases is there for exempted supplies and non-taxable supplies. Next, T3. What is there in T3? It is a blocked credit. If any blocked credit is existed, it will be reduced. Blocked credit will be executed. Blocked credit is related to one, that is we are provided a free samples, that is come under blocked credit only. And if any items was provided under the CAP services, that is GTA services, it will also a blocked credit. Next, answer, computation of total input tax involved, that is T. Whatever, if you liable for tax, you will be taking first. So GST paid on taxable items 55 lakhs into 18%, 9 lakhs will be considered. Next, items wide notification, since exempted, no GST will be payable. Exempted products you will not pay any tax, so it will not be liable. Next, item not liable to tax, they only telling no liable, so no GST, nil. Next, GST paid and reverse charge mechanism, that is reverse charge mechanism will be considered. So inward transportation of taxable items 5000 is calculated. Next, exempted items 4000 will be calculated. This 4000 will be become T2. Next, GST paid and reverse charge on freight, which is inward for non-taxable items. Okay. Next, GST paid on monthly rent 99,000. Out of this 99,000, 1/3 will become non-business purpose. 1/3 will become personal purpose. Next, 250,000 into 18%, that is packing charges. 45,000. Next, paid to salary paid to staff at the store, it will become nil. There is employer-employee relationship, no supply will be arise, no GST will be payable. GST paid on input used for personal purpose. First we will take, but it is non-business purpose, so we will consider it as a T1. Next, GST paid on CAP services available for business purposes 4,000. It is a blocked credit, it will be treated in T3. Next, free samples, it is also a T3 CAD. So total tax involved will be 11,57,000 first of all. Now computation of T1, T2, T3. T1, what is there in T1? This is related to which is the non-business purposes. Non-business purposes, it will be personal purposes used, will be non-business purposes. So the here two items was used for personal purposes. One is GTA services, and one is for monthly rent. So out of that we will calculate that. What is their monthly rent? So monthly rent attributable to personal purpose, that is 99,000 divided by 3, 33,000 will be non-business purpose. Next, GST paid on inputs used for personal purposes 5,000, that is 38,000 exclusively for non-business purposes. Next, GST paid on reverse charge mechanism freight, it will be GST paid on GTA for inward transportation of exempted items, so 4,000. and GST paid on reverse charge mechanism on freight paid to GTA for inward transportation of non-taxable items. So exempted items and non-taxable items. It is for exempted supplies. So 4,000 plus 1,000 will become 5,000. It is exclusively for exempted purpose. It is become T2. Next T3, what is the T3? It is a blocked crate. Blocked crate means free samples and some products was rent cab will be blocked crate. So rent cab and that free samples will be blocked crate. 4,000 free sample, 4,000 total 8,000. Okay, since GST paid on inputs used for personal purpose has been considered while computing T1, that same has not been considered again in computing C3. So ITC credited to electronic credit ledger. How much will be eligible for electronic credit ledger? C1 is equal to T minus T1 plus T2 plus T3. T means all taxes first we have taken 11,57,000 minus whatever the non-business purpose, whatever the exempted purpose used, whatever the blocked credit, it was deducted. Total amount will be 11,06,000. Next, computation of common credit. What is this common credit? C2. C2 will be C1 minus T4. C1 minus C4. C1 already we have calculated, but T4 means what is this? T4 to input tax credit attributable to input and input services intended to be used exclusively for affecting taxable supplies. We are calculated above was exempted, non-business, blocked. Now we want only related to taxable which is eligible ITC, that is GST paid on taxable items. Taxable item we have paid GST, that is 9,90,000, and reverse charge which is freight paid for transportation of taxable items, that is 5,000. It is exclusively for taxable items. So 9,95,000 it will become. So C2 will be common credit will be 11,06,000 minus 9,95,000, that is 11,11,000. Next, computation of ITC attributable towards exempted supplies out of common credit. Out of common credit, what is the common credit? 1,11,000 into exempted turnover divided by aggregate total turnover. Exempted turnover divided by total turnover, that is 15 lakhs, 12 lakhs plus 3 lakhs will be exempted supplies. Total turnover in the state during the tax period will be, total turnover will be 65 lakhs, that is 42 lakhs plus 12 lakhs plus 3 lakhs 8 lakhs. Now here note, transfer of items to store located in Goa is interstate supply in terms of section 7, and hence included in the total turnover. Such a supply is to be valued as per Rule 28. However, the value declared in invoice cannot be adapted as a value since the recipient store at Goa is not entitled for full credit because the credit is distributed as a free sample. ITC on which blocked credit, therefore open market value of such goods will be considered for Mumbai store, that is 15 lakhs divided by 65 lakhs into 11 lakhs will be 1,11,000 will be 25,615. That is what is this? This amount will be attributable to exempted supplies. Now attributable to common credit, eligible common credit. From common credit deduct the exempted credit. Now it will become eligible ITC 85,385. Now calculate the GST liability, whatever liability is there, and we have calculated exact liability, exact electronic credit ledger 7,56,000, and taxable item transferred to Goa 8 lakhs into 18%, 1,44,000. So total tax liability will become forward charge 9 lakhs and less credit eligible ITC electronic credit ledger 10,80,000. Next month will be 1,80,000. Net GST payable nil. So GST under lever charge mechanism you must pay in cash only. 5,000, 4,000, 1,000, 10,000 will be payable in cash. Net GST liability to be paid in cash as per rule section 49. As per section 49, you must pay in cash only. cash only. There is no availability of using the credit ledger for paying the reverse charge mechanism. However, tax payable under reverse charge mechanism no on output tax, so therefore it must be paid in cash only. Next, this is alternative way. We will not discuss this alternative way, and we will consider in next class.